starting back up again here. So we're going to get going here in about 1 minute. Just want to check on a couple other things, and then we will get fired away here. Can you guys all just do me a quick favor and just type into the chat, give me a 1 if you can hear me okay, and there's no delays or issues, and give me a 2 if you're having any delays in the stream. Okay, great. I think we're okay then. We got one guy replied back, so we should be good. Anyway, I'm going to get rolling here. Appreciate everyone dropping in this evening. It is non-farm payroll the end of the week here, so there's a number of news events coming up and tied around to that, as I think we all know as traders. And if you just give me 1 second, I'm just going to pull up the news for the week and just run through that real quick here. In the meantime, if you're not already subscribed, please check us out on our website at f45trading.com, and you can sign up for free, get 30 days free. You get signals and educational videos and commentary, live chat, and market outlook analysis, week look ahead into the next week every single Sunday. There's a ton of value there, a ton of resources, a ton of content. Check it out, free for 30 days, f45trading.com if you're not already a member. If you are, great, welcome back. Appreciate you continuing with us. And you can also check out a bunch of our stuff on Future 45 Trade Signals on Instagram. We're under Twitter as well, too, under the same heading. So you can pretty much find us anywhere. But I appreciate you guys' support. And if you're on YouTube watching this, go ahead and click down in the bottom right-hand corner and click the subscribe button, and then you'll get notification when we go live for our next ones. And just so you know too, our live sessions going forward, we are now going to be every Tuesday, Wednesday, Thursday at 12 a.m. New York time, every single week, Tuesday, Wednesday, Thursday, and we now just added another session on Fridays. One of my analysts is going to be coming in and trading the New York session, so he's going to be trading the CME Open and beyond for about an hour. So he typically trades the S&P, gold, and a few other pairs, so you can get some great value on there. And again, Fridays in the mornings, and that starts at 7:30 a.m. New York time. So tons of content, tons of stuff coming up, guys. And I'll put the schedule out again in case you missed it. It'll be loaded up onto our website there. So. Anyway, just flipping over quick, we're going to run through the news items for the week, and we're going to get set up here and get our trading on here for the rest of the week. So going into Tuesday, we've got some Euro news, some medium impact, nothing too serious here. Some high impact news for the US dollar, which I think could drive us a little bit higher. From current levels. I'll talk about that here in a minute. We've got some pound sterling, Governor Carney speaking, and then towards the end of the day we've got some Australian dollar news, some 2 high impact events, so there could be some good movement there. And going into Wednesday, tons of Euro news. So I think just by looking at this here, I don't believe we'll be looking at any trades on the Euro today. I think we'll save our trades for the Euro for Wednesday. As you can see, there's so much news coming out. We'll look at that and we'll analyze that, and we'll see what kind of signals are going to be coming out for Wednesday before London Open. And then we've got some big news coming out on the US dollar index at 8:15. A little bit of loonie in here. And then all basically medium and some high impact news statements on Wednesday for the US dollar. And then we've got crude inventories here as well too, which I'm expecting some big things out of crude. So going into Thursday, this basically, just so you guys are aware, Wednesday at the end of close, so basically not even 2 a.m., pretty much, 10:30 to 12. This is when we exit our positions for the week, and because we've got all this news happening on Friday, which you all know, which is non-farm payrolls, unemployment rates, construction PMIs. This, sorry, not, that was for pound sterling. Talking about all of this news right here. This typically tends to vault the market around quite a bit, and I do not like to trade during this time. And if you're a professional trader like we are, you will elect to sit on the sidelines and wait that out, unless you've got a crystal ball and you know exactly what price is going to do, or you've got your stops so wide on the market that 100 pip swing will not affect you whatsoever. Feel free to trade it. But for us, we don't issue any signals, and typically Thursday becomes a day where it trades sideways typically, so we don't see a whole lot of action on Thursday. So we elect to get all of our trades out Monday, Tuesday, and Wednesday, with the last trade coming out and being closed typically right about that 12 noon New York time, is typically when we end our trading for this week. But next week when we come up back, so we'll be doing live sessions again Tuesday, Wednesday, Thursday, and Friday this week. The Friday session will be done actually after the big news events. We won't be taking any trades obviously during. Wait for the market to sell down. If there is a trade, we'll look at doing that, but we certainly don't trade during non-farm. So, and then again next week coming back, same schedule: Tuesday, Wednesday, Thursday. We're trading London Open at 12 a.m. and then Friday we'll come back again 7:30 a.m. and we'll get on that S&P. So that's the schedule coming up, and we're going to dive into it here now and look at some charts here. So I will just move this aside. And we're going to talk about the dollar index here real quick. I'm going to zoom in on this chart here, and we're going to look at a couple of levels. So we have just come down. Now, going out on a higher time frame, if you look over here, I like to trade from consolidation to consolidation. Typically, it's a draw-on price. There's liquidity that rests below it, and there's a lot of action that happens. Algorithms typically seek out these types of areas, and again, it's just like a magnet. It pulls price down towards them or up towards them in the case of a bullish market. But we've now come through, and we're sort of hitting and sticking this red dotted line here at 88.75. And just so you guys know too, and I'm sure you're aware of this. 88.75. This isn't going to be the exact same level on every single person's chart. I use a broker. This is a demo account, just so you guys all know. Anything that you see in here going forward, it's all under demo. We don't do any live trades with anybody. Again, please take a look at our comments in the chat area, and that you understand that this is an expression of opinions and not professional trading advice, and you are solely responsible for the use and content of everything in here. So we don't want to know what you're doing, but everything in here, just so you know, it's not live money, it's all demo. And on these demo accounts, the feed can vary slightly from from broker to broker. So I'll give you an example. So I've got a range in here at 88.75. If I flip over to another demo account, we've got sorry, it's going to go to a weekly here. We've got another level in here at 88.72, which is the middle of that range. So it's off by about 3 pips. So depending on what broker you're going to use, it's going to vary, but it's pretty close to 88.75 is going to be the middle of this trading range here that I'm looking at. And you can see price has wicked through it once, wicked through it twice, and so far the bodies of these two down candles have not pierced it. So what I'm basically trying to allude to with this is, if the bodies continue to not pierce this, and we do not get a candle that closes below that, we're going to see some retracement higher on the U.S. dollar. Now, what they could be doing going into non-farm payroll, just to try to forecast for the rest of the week here, is I believe we're going to see a bit of a pop in the U.S. dollar. So I think price is going to, and you can see it's starting to trickle up a little bit. I think we're going to see a bit of a bump up into this previous consolidation area right here. And then I think non-farm payroll could be the catalyst that drives it back down and through. So I think we're just sort of pausing here right now. We're building, the market makers are building up orders, and then I think they're going to send it down. And if we see continued bearishness on the U.S. dollar. And then the next level is right in here that I'm looking at. The next level would be this first blue line, which is at 87.80, which is just the lows of that consolidating area right in there. And then the next target from there would be 86.85, which is the highs. And so that would be our short-term intermediate targets for the next week or two, taking us into the middle or towards the end of February. Those targets would be very realistic. Now, if it does happen that these candles reject, and this is as low as it goes, again, our first targets for the week will be the low of this consolidation. And if non-farm payroll decides to say, well, this is going to be the end of this bear market on the dollar, which I think we've got more to go. I'm on the record. I think it's going to go a little bit further. But if non-farm does come in and say, no, this is it, and it pushes it up through this consolidation area, this is going to be our next target up here, which is 91.50, again, short term. So we'll have to wait and see how that pans out. But meantime, for Monday's trading, which was yesterday, today's trading, Tuesday, and Wednesday's trading, I believe we're going to slowly start chopping up. And if it doesn't tag this, like I say again, I think non-farm will do it and then eventually roll it over or send it higher. So that's sort of what I'm anticipating on the U.S. dollar index going forward for the week. So that would take us into, obviously, no, I shouldn't say obviously. If you don't know, the U.S. dollar index, so we trade the major pairs, major currency pairs. So we don't trade the U.S. dollar index. We use it as a guide to help us trade the rest of the majors. But we trade everything else associated with the U.S. dollar index. So the Euro USD, the Pound USD, US CAD, Aussie USD, obviously. I go through crude oil and everything. It's all tied in with the US dollar, of course, and so on and so on. The US yen, things like that. And so when the US dollar, let's say, for instance, I'm looking for a short-term rise in the price of the US dollar and then long-term bearishness, what we're going to see is the inverse happening with things like the Euro USD and the Pound USD, for instance, because the US dollar is the second currency in that basket. So whatever happens to the US dollar, these two pairs are going to see the opposite happening. So as you can see, we're going to see let's say, for example, we see a rise. So you can see price has been steadily inclining. All right, so you've been in a very, very short-term bull market. And you can see here the inverse is happening with the Euro USD. We have a very short-term bear market. Now, I believe, again, so when I trade, we trade from consolidation areas to consolidation areas, but we also trade from liquidity pools to liquidity pools. So what I mean by that is where everybody's got their stop is where price is headed. It doesn't get any simpler than that. So if you're looking at this chart right now, and let's go back to a daily just real quick here. Sorry, I got a lot of shrapnel on this chart here. Let me just actually, before I get into this, let me just tidy this up just a wee bit. We had a bunch of signals that went out on the early on in the week, and actually these ones were from last week. You can see that was Friday's trading. But I just sometimes I forget to clean up my charts afterwards, and they get a little riddled with literature. So anyway, looking at this chart, you look at this, okay, this has been a nice bull market. Every time the market's come back, it has failed to take out the previous lows, as you can see here. So we had a lower low down, we had a low down here, and then we had a higher low here, and a higher low here, and a higher low here, and a higher low here. Okay, so price has been stacking up under these lows. Okay, all of everybody's orders and stops who are currently correct in the market and are long have all of their orders, stop orders, sitting underneath these lows right here. So what I mean by liquidity pools is there's a ton of liquidity sitting under here. So the market makers are going to want to drive down and seek out that liquidity in order to buy that all up at a discount and take price higher. Now, this again is all coupled on the fact of what the US dollar index is going to do. So if this overall is going to continue its bearish trend, which I think is fairly likely, I don't know that we've turned the corner yet on it, although I think it's going to be very soon, right? I mean, this level going down to this weekly, these weekly lows in here, it's not very far away. And we've been on a steady decline since, you could call it November. So it has been November, December, January. It's been 3 months. And typically what happens with price is you get a shift in market direction, whether it be just a smaller retracement or, an overall trend reversal. You do get a shift in price every 3 months or so. And so we have been, again, in a steady downward declining market since, end of October, early November. To be honest with you, though, this is a weekly, so it started right about there. So it basically started the 1st of November. So we're due for a shift. So again, this could just be, price, they could be holding on to it right now, and they're going to bang it in here for another few more days, and then they're going to shoot it higher. And we may only get a retrace, for example, up into this consolidation area, and then maybe it'll continue lower from there. I don't know. All we can do is trade from day to day, and with our overall outlook bearish until market proves otherwise, or price proves otherwise. So again, with that in mind, ripping back to the euro, I think we're going to see something like this happen. Price is going to come down. Now, depending on how much liquidity they want to soak up, they could even come down to here, this 1.2088 level, or 1.2090. Without having to get too specific on numbers, and then do something like this. Or they may not want to go that deep. They may just want to come down into here and then run higher from there. Now we are on a daily here, so just going down to that level. Let's say, for instance, it comes back down to this consolidation area. I mean, that's a good 100 pips. And the Euro USD, that would be a good haul in a day. So what they could do on Tuesday here is they could come down, drive it lower, and then slowly start to trickle sideways until non-farm hits, and then jam it higher. And I don't think we've seen the highs yet in the euro. I've got some areas marked out on my chart here that, let me get rid of this box, as that doesn't mean much. But you can see these red lines, these red dashed lines I have up here. These are very, very significant areas in price that I believe are going to be targets if we are going to continue this bullish move. Now, there's another pattern out there, and I'm sure you're all familiar with it. I don't trade it personally. It's not that I don't believe in it. I don't think that market price is based on it. As bankers and market makers, and all the major central banks around the world, I don't believe they have their algorithms set out to what I'm about to explain to you. But some people, there are, for instance, numbers in this world that for whatever reason specific things gravitate to. And so if any of you have heard of, obviously, the Elliott wave out there, in the Elliott wave there's 5 motive waves in a typical direction of the market. So whether it be bullish or bearish, I think there could be a couple more motive waves left in this pattern before it dies out. So let's say, for instance, you have a motive wave up here. This would be your first motive wave. This would be your second. This would be your third. And then we could be coming down into a fourth, which, again, depending how deep this retracement wants to go, we could be coming back down to this level down in here, which would be the top of this old range back here. And then price would continue potentially, do something like this. Right? So that being 1, 2, 3, 4, and then the fifth one coming up and finishing up in here. Typically, the third wave tends to be the longest and most drawn out. So again, it may not start retracing from this current level here, but you get the picture. Again, I don't use the Elliott wave. I don't necessarily believe in it 100%. There are a lot of traders out there that use it. I'm just trying to give you an example of just something that, for instance, this is a good market gauge right here. Typically, you get symmetrical price swings. So if this being one price swing, you could have another price swing, for instance, that would take you, again, back up into the areas that I'm defining up here. And if you look back, really what I'm trying to bring your eye to and your attention to is these old consolidating levels back in here. Which again, as I said it in the beginning of the presentation or of the live session, these are they're like magnets to price. Price needs to return to these to rebalance itself out. Anyway, without having to go into that into too much detail and bore you guys on that, I believe we are going to see higher prices overall long term. We could see a short retracement, and that's what I'm banking on early this week. So for Tuesday, being today, Wednesday's trading, I believe we're going to see a bit of a small decline in price and then an overall continuation. So again, I just accidentally deleted that. I think we're going to see this. And I believe price could be targeting that high at the end of this week. So we'll just mark that out there. What's the high of this candle here? 125.37. So you could call it 125.40 just to sweep the highs, and I'll just mark that on here. So that's what we would be looking at. And what I will be doing this week, and again, just kind of coming back here to the news drivers, because this is typically what will really drive the news and create the liquidity. We've got some medium impact news today. I don't think that's going to do it to send it lower. I think it's going to be this news in here on Wednesday. You've got one high impact news driver there, the CPI flash estimate, and I think that's probably what could do it. Again, sending it down that 100 pips or so from here, and then bouncing it up on non-farm payrolls. So that's what I'm looking at. The euro, no trade this evening. I'm not looking at anything technically. I mean, you could get short from here, but again, it's just prices just chopping, consolidating, and sort of going sideways. There's not a lot of action right there. So there's really nothing to get too excited about, to be honest with you. You may be able to scalp 20 or 30 pips. And one of my analysts, so just so you know, if you're new to F45 trading, there's a few of us that are all looking at the market, and we all have our specific pairs that we focus in on and our specific trading preferences. So for instance, myself, I typically gravitate to be a short-term swing trader and a day trader. I have another analyst who is strictly a day trader only, and I have another analyst who is a scalper. He likes to do intraday movements and capture 20 pips here, 30 pips there, and do that a few times a day and capture basically a great daily haul. So you get a few different trading styles with us at F45 Trading, and it's not all the same. He'll be trading on Wednesdays, so if you guys gravitate to that scalping style a little bit more readily, he'll be doing the London Open session at 12 a.m. New York time every Wednesday. I'll be doing Tuesdays and Thursdays for the day trade. So what I do is I'll do the setup before London Open, and we'll look for some trades, and the trades will typically execute during London Open, and then the bulk of the movement will happen during New York Open, which again is about 7:30, 8 o'clock New York time, and then we let it ride until about noon, where we usually collapse the trade in full profit, and away we go. So that's sort of the type of trading I do. And then our analyst on Friday will be mainly trading the S&P 500 on Friday. So that's kind of the schedule that you can look forward to from us going forward. Anyway, so back to the chart. So Euro USD, I'm going to let to sit on the sidelines for the Euro for today. I don't see anything there that I'm overly... you know what, actually, now that I look at this, give me 1 second. I do see a bit of a level here. Now, again, you see how prices fluctuated up, come down, failed to go higher, and now we're starting to matriculate down. I think what we could see is price. Now, we got equal highs up here, so I'm just going to mark some levels out on the chart here so you can see. One of two things I think is going to happen before price drops lower, and again, I do believe we are going to be going lower, moderately lower, and the areas under here could be a target, or even right under here, this old low under here. I don't think we're going to get lows down this low here. That's quite a ways from where price is right now. But let's just say, for instance, we just picked a target at, let's say, the top of this consolidation area for argument's sake. So 22.74, let's just make that an even number. at 22.80. Okay. What I think could happen as price plays out is I think we will see one of two things happen. Price is either going to come up to here and just briefly clear out the highs here, reject by, and like I'm talking a couple of pips here. The high on this one comes in at 123.89, so 123.90. We could have like a 5-10 pip rejection, and then price, and basically would just look like this. It'd be one candle would go straight up like that, and then you'd see a wick, and it would possibly tag out this 123.95 level, and then price would drop, and then we'd be looking for lower lows down to what did I say here, 122.80, so about 100 pips lower. That would be a great trade setup. Again, I don't think it's going to happen today. I just think there's a lot of news events happening for Wednesday. It might be a little more high probability. I could be wrong. Been wrong lots in the past, but the other option is price could come up and take out the old highs here. I think this is less likely, and only because price has already been up here before and created the high for Monday essentially, and we've been trading softer off of that. So I don't necessarily think that's going to happen yet. And again, I'm only basing this off of the price action that I see in the dollar index. You can see how we've been rising. I think it's going to peak out somewhere here before it rolls over. It's going to be the same thing with the euro. I think it's just going to steadily keep dropping. And so it may not give us a clear signal, but if you do see price rip up into this area here, I'd be looking to take a short and riding it down to 122.80, somewhere in there. Now, if price, let's say, for instance, you did get long here, and price came up, let's say, to 124 even, and let's say you got short right up at that level, I would put your stop conservatively at least up to here. It's a big stop range, so you definitely want to be. I typically only trade with about a 30 pip stop. I don't, and I'm looking for at least a 3-to-1, 4-to-1 trade. So 30 pip stop, I'm looking for a 100 to 120 pip range on the day. And that's tolerable risk assessment in my opinion. But if you got to go in, let's say you went short at 124, I would be putting my stop above this high here just in case they wanted to come up and take these lows before they dropped it lower. And that would require a fairly deep stop. So just watch price, just keep an eye on it. Maybe put an alert, set it up here at 12400, and to alert you, come over to the charts, take a look, see if price is just wicking in that area. If it's wicking and it doesn't look like it's a big full-bodied bullish candle that wants to go up, then maybe look at taking a short, reduce your trade size, obviously, and then put your stop at about, again, I would recommend putting it above here, just because they may want to screw around in this level a little bit before they drop it, but you could look at doing that. But I don't think it's going to happen today. I think the more likely trade today, in my personal opinion, is going to be well, let's have a look at the pound dollar. Typically what happens, the Euro USD or the pound dollar, one of the two have the move for the day, and the other one just typically consolidates or goes sideways for the most part, or it's the lagger of the two. So with the pound dollar, I like these levels a little bit better. I'm calling lower levels, and I'd like to see price. I've got a couple of pretty deep levels in here that I'd like to see price retrace down to. And we'll just start out, we'll go to a higher time frame. Now we've seen a real nice healthy rejection at the 143.44 level here, the high on this candle, 143.44.7. So you could call it 143.40 for all intents and purposes. But we actually put a signal out on this pair at 141.70, and had a nice little trade on this. We got over 100 pips on this trade just on Monday alone. And it was a nice little healthy trade, but I think we're going to see continued prices lower again on this one. Price has bounced nicely here, but it failed to take out that high, and now it's coming back down and trading off about to take out another low. So what I would like to see happen, and I don't know that we're going to get price bounce up too much higher than its current levels. What am I on? I'm on a hourly chart. Let me just zoom in here just for a minute, guys. I don't know that we'll get price getting above the. What I'd like to see is price come into here and try and get above here, but I don't think we're actually going to see that. So let me just zoom in one more time here. I'm on a 15-minute. Now again, just real quick on the daily, I could easily see this 139.44 price getting tagged off before we see a continuation higher at these levels. But the pound dollar's been on a bull run for quite a little while, and it does need to relax a little bit and pick up some of the liquidity that is resting below, and that's what it's been doing here since last Friday. It hit that high and it's been rejecting since. So again, 139.44 is a nice area of rejection. It could even come down to the top of the bodies of this small consolidation in here as well too. So that might be 138.90, ish, somewhere in and around there. 139 big figure. That would be a good level. So price basically doing this to try and spell it out a little bit better for you guys. Hopefully you can all see that on your charts. That would be what I'm looking for. And again, the same thing as the euro. I think there's a lot of levels in here that still going to be a pull on the pound sterling here, and I think they're going to want to keep sending this thing higher up into these pre-Brexit levels up here. We've been on such a nice bull run, but again, it's been a huge upward velocity bull run, and I think they just need to relax price a little bit, which I think is what we're going to get with non-farm payrolls in conjunction again. So going forward, that's the levels I'm looking at. Sorry, let's go back to the weekly quick. This 1.5000 big figure here. I mean, that's a big target on my screen that I think it's not going to happen next week or next month. But come May, June, who knows? Anything's possible. That's a lot of range still from there. It's about 1,000 pips, but right, 800. What are we? Yeah, just under 1,000 pips from here to then, or now till then. But that is a target that I am looking at, and my eyes going right to there. In the meantime, we could screw around in this area a little bit more, and dropping down, consolidating, and moving higher. And price isn't just going to be like a straight up shot to there or anything like that. It's going to do this sort of thing all the way up. But again, that could be a good 6 month if you're a swing trader or a position trader. That could be a great outlook, and you could get long off of these lows that it's going to create later this week, and ride that thing out if you have the patience to sit in on one of those. But anyway, I think what we're going to be looking for here for the short term, again, just trying to look at some targets here on the downside that I like to see. Price was very efficiently traded in here. So one of the things that my eye goes to when trading is areas that just are like this, that just go straight up with no retracement, right? Straight up with no retracement. Typically those areas are a pull on price. And again, as I said before with the euro, look at here, right? We've got you're going to see a common theme here, but you've got a low, and then you've got, I didn't mean to do that, but you got a higher low, right? A higher low, higher low. The only time it really came back was this one little dip right here, and it still didn't take out these lows over here either. Price still continued just to keep on soaring straight up. So again, you got a low there. You got another higher low, right? Higher low, higher low. So you can kind of see the pattern, and every time this thing keeps going up, traders are doing what? They're sitting there, sticking their stops right underneath the old lows, right? So there's a bunch of liquidity here, there's a bunch here, and there's a bunch here, and there's a bunch right up here. And what's price doing? It's taking people out of the market who are currently correct on their bias of the market. All these guys in here are sitting there, I'm long, I'm long, I'm long, and look, price is going up, and oh, guess what? It's going to keep going up, but they're going to retrace, and these guys are jamming their stop all the way up here, and all the price is going to do is just come down and bang them out one at a time. Ding, 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 ding. Now, again, I don't believe, unless we're on an overall correction here, like I was saying earlier, a 3-month correction, I don't necessarily think we're going to get down to this 136.60 level, but this would be a good level, actually a little bit lower here, right to the top of that consolidation, so about 136.40. That would be a good area where I would be looking at overall if I was bearish on this. And to be honest with you, prices significantly got to break through these levels to start changing my mind. But I think what we're going to do is just basically what I've got outlined there on the chart, where price is going to come down, bang up, and start going higher. And that's a pretty good run. Like if you could get a pip haul off of that, I mean, from current levels down to the 139.40 level, that's 100 pips. Maybe even get this one here at 150 pips. But I would suggest the cable as a potential one. And so what I would like price to do, we've already come up and we've already closed in this area here. It does offer a lot of liquidity up here. I think they've been leaving these highs intact here, and they haven't come back for those for a reason. I think potentially, and if it was going to happen, it'd be happening fairly soon here, if it's going to do it at all. So one of two things is going to happen. And sometimes you see this at London Open, so pretty much starting here in about 20 minutes until New York Open, you get those days where price just never comes back to get you an entry. So what I mean by that is when we trade and we put a position in, so for instance, I'm biased to the short side on pound dollar. I am not buying price on a down candle. I'm not selling into price on a down candle, okay? I'm not getting into my short position when price is doing this. I'm only getting into a short position when price is doing this, okay? You see what it's doing here? It's coming back up, it's retracing. That's when I'm getting short right here, okay? I'm not doing it here. I'm not chasing price, because when you start to chase price, that's when you get into trouble. So that's not happening. So you could have probably got short even right in here when price came back up to the small consolidating area in here. Could have got short there. And you see how they're just building up and building up and building up right in here. I think price is going to release here, and it's going to be like a spring, and they're just compressing and compressing and compressing price. And this is going to be a nice big spring that's going to spring out. So one of two things is going to happen. It's either going to do this. This is what I'd like to see happen, and then price is going to drop. Now from current levels at 140.40 up to here, that's about 40 pips. So that's quite a ways away. And now what they may be doing, just to go back to the news drivers here, what they may be doing is using this news event here to get that, to put that in. They use these news events to basically create liquidity in the markets, to fluctuate price, and to drive price into directions where you're not, is basically what they're trying to do. So they scare people out, and technically what they do is they do these moves. It's a fake out. It's a trader fake out. So at the beginning, when price is just opening for the day, and I'll give you an example. Let's just say, let me just look for a candle here. Let me take these data dividers off. Okay, for all intents and purposes, this is a good example right here. See this rejection candle right here? So when price opened up right at the top of this black candle right here, and then it ran all the way up. Now again, I don't know what time of day it did this. I believe it was in the beginning of the day, if I can remember right. But price ran all the way up, rejected, and finished lower. Well, when price opens up for London Open, that's exactly what they like to do on a down close day. When we're going to have a bearish black candle as a down close, what they're going to do is they're going to take the market higher. They're going to create that wick, and I'll just put this data dividers back on so you can see price opened up right here. Okay, so far it looks like a bearish candle, but that's right where price opened up, and there's a very, very small wick up here. So what I think they could do is come up, fake people out thinking, oh, this is going to go long, and they create that wick on the early morning open of the candle, and then they drop it down, sink it, and it ends up being a big bearish candle, and then we finish down here somewhere. So I believe that's what could happen, and that would be the setup that I'm looking for as option A. I mean, that's what I want to go for. I want to see price come up there. That's when I'm selling into it, and then price is going to roll over, and I'll be looking for these targets down here. That would be, and you know, I think, let me just look at this and find out what my target levels are going to be here. Like, I like these candles. See these two candles here, these two rejection candles? I kind of like those as a potential target, but I don't think I'd go that deep. So here's what I would suggest. When we put in our trades, we always use a couple of different target levels. Okay, so we trade with the following. We trade with a stop level, and we trade with a take profit level. Okay, but what we do to make sure that we maintain equity in our accounts and that we are continually profitable is we set very short-term take profit levels. Okay, so what I mean by that is once the trade executes and goes into profit 30 pips, we always take off some of our profits at 30 pips and we pay ourselves. So if I've got, let's say, I don't know, 6 mini lots on as a trade, just for an example, I'm taking off 2 or 3 of those mini lots as soon as price goes into 30 pips into profit. Then I also, in conjunction with taking profit, move my stop loss to break even. So now no matter what happens, I've paid myself. They can't take that back from me. So if price decides to go the opposite way and it hits my stop, no big deal. I didn't lose any money. I banked a little bit of profit. The trade didn't go the way that we thought it was going to go. We got lucky with the 30 pips, and we go our separate ways, and then we come back to that trade and analyze it again. The second take profit level is going to be our target. So for instance, this trade here, I would set my target to be somewhere in this neighborhood right around here. So I'll just move this line here. Actually, no, I won't do that. I'll just move this guy down here, and we'll say, again, as a nice even number, 139.50. Okay, so if price jams up to here and does this, we're looking about, and I want to be fairly accurate for you guys here, so let me just take this high here, 140.79. Price will either come 5 to 10 pips up, sweep it, and drop. So we could be conservative, and we'll say 140.85. I put a stop in. Again, I use a 30 pip stop, but in this case, I'm going to elect, they may want to drive it even up into this consolidating area up into here. So you see this green line here. I wouldn't want to see price go any higher than that, but it's going to create a bit bigger of a stop level. So what is that level at? Just give me 1 second, guys. I just want to make sure I dial this in right here. 141.27. Okay, so about 141.30. Okay, so that's kind of what I'd be looking at. So it's about a 45 pip stop, a little bit larger stop than what I normally use of 30 pips, but I would be reducing my risk. So if I typically traded with one standard lot every trade, I would be reducing my risk personally, and I'd be doing about half that. Just to, if this does not decide to do this and decides, oh, I've hit support in this area right here and I'm not going anywhere, and it just reverses and goes straight up, well, yes, it's a bigger stop, but I'm using reduced risk, so it's not going to affect my count. as much as a a one lot at 30 pip stop would be, obviously. So this is kind of what I'm looking at for the rest of today to transpire. And again, it is non-farm payroll, so this is about 130 pips or so. We may not get that. It's a non-farm payroll week, and price has put in a couple of good days. It's there's 125 pips there. This was Friday's trading. If you got from wick to wick, that was 150 pip. That was a big day. So we got a good trade off on the pound dollar, and it's actually been trending quite nicely. So yeah, I'm just watch this level again, guys. Come in here, put some alerts in, and this is what I'd be looking for to transpire either into Tuesday trading or Wednesday's trading. I'd like to see it happen today. Again, it could be the euro that might see it. So typically, what happens again? It's either the euro or the pound dollar that are going, and you can typically judge that and where they're going and what's happening with the euro GBP. And I got a ton of shrapnel on this chart right now, but let me just get rid of that for you there. But as this is creeping up, it is going to send the pound dollar down and consolidate Euro USD, or Euro USD is going to be going up and pound dollar is going to be consolidating. And you don't see that happening, obviously, with the Euro USD. It's going south. It's actually technically been chopping sideways a little bit. I mean, yes, it's making some decent ranges, but it's really been chopping. So that's kind of what leads me to believe that the pound dollar is going to be the one to trade, and I think we're going to see it lower here. So, but I've called them both out, so watch them both. Have a look at that into today's trading, and we'll see how that goes. I don't think we're going to see a lot of action on it until 4:30 a.m. New York time. So we got about 3.5 hours to go. I'm not going to be online for that much time, obviously, but we will be here for about another 30 minutes or so. I want to cover a couple more pairs, and then we're going to close it down. But that's sort of what I'm looking at here. Okay, the pound yen got a great trade off of this here last week. Just a short little quick trade on it, and I can get rid of this for you guys here. Every now and then we do trade the pound yen because you can get some good movement on it. And if I can clean this up here for you, you might be able to see it a little bit better. Again, same sort of thing with the Euro USD. You can see here on the daily, just a great move upward. And it might be starting to hit some exhaustion levels in here. Same sort of thing with Brexit. It's traded now up and banging off into this consolidating area in here. So we could want to see price drop down, and it could even drop down. I'm not a trend line trader. That's the other thing, just for the record. There's a couple things I don't do. There's a lot of, one, you don't see a lot of shrapnel on my charts in terms of, indicators and moving averages and stochastics and et cetera, et cetera, et cetera, et cetera. I don't trade off of that. I trade based off of what price is doing and the levels that price is attracted to. That's how I trade. And but I'm just trying to reference this so you can see this is clearly a bull market, and we've been in a bull market since price failed to take out this low right down here, and that was in August, the end of August. It failed to take out that low, and we've been in a bull market ever since. So again, you can see price has just been a magnet up at these pre-consolidation, these pre-Brexit days here, and I think we're going to want to continue to go higher. There's some great levels up here that I'd love this to trade up into. I'll just put this on the chart right here. See this area is up in here. Everybody who was short here and who was right, they've jammed their stop up into here. And what they've been doing now, they've been coming back, and people have just been jamming their stop, jamming their stop, jamming their stop, and they keep coming back, taking it, and they're going to keep doing that all the way up. And there's other reasons for it too, which I'm not going to get into. in this at all, but that's on a real basic macro level. That's sort of what we're looking at. So anyway, this going forward, we could see that my eyes going right down to here, and then this range in here. This could be a very, very popular area for price to want to go into. You see this kind of consolidating area, and I would even suggest that potentially the level off of this consolidating area. However, that's 164 pips. The pound yen can do that in a day easily without losing too much sleep. Let's put the day dividers back on here, and you can see the levels that these things have been achieving. This was a nice day. You know, this was a 250 pip day. It was a big swing this day. It was a 330 pip swing down to another 250 pip rally. It was a crazy day on the pound yen on January 9th, but just kind of coming back here a little bit. My eyes go down to here since we're already into this consolidating area right here. So let me mark this out a little bit easier for you guys to see. So you can see how price is consolidating in this area here. I'm just going to change this color up just so you can see it a little bit better. Okay, and maybe we'll make it a little bit thicker. Okay, so you can see price is coming back down and hitting this consolidating area right here. So price, it came down, took out all the stops under here, rejected, consolidated, exploded out of that consolidating area, came back, retested the old highs, and exploded up and up and up, and it was getting higher ever since until last week, and then it started to fall off, and now it's retracing, and now it has gone back into this consolidation area here. So the telltale sign is if price hits this level like it did here, price hits this level and it gets retraded to and it rejects, we're going higher, and it's going a lot higher, okay, which you can see what happened here. After price rejected off these old highs here, it cleared out another 300 pips. So now it's come back down to it again, and price has not been seeing the reaction level that we saw here. So it's trading down, and now we're already into the middle of that consolidating area right, for argument's sake, right here. So what you want to watch for is 152.50. If price breaks 152.50, and I mean convincingly, this candle needs to close below this 152.50 level, we're going to go lower, and then my eye would go down to this old consolidating level down in here. Let's borrow this. Okay, that's where my eye is going to go to next for the pound yen. So I'm not going to put a trade out for this one yet. I want to see how price develops off of this level, because one of two things is going to happen. It's going to do this. It's going to come down. It may even wick through it a little bit. You know, it may come down, wick through, just maybe even potentially touch off that trend line. I don't know. I wasn't very accurate drawing that trend line or anything, but just to kind of give you a guide, a reference, you know, and do this and continue higher. Or if price, again, like I say, it could just wick and do that. Or if price closes below this, if this 4-hour candle comes down and closes below that, I believe we're going to go lower, and I believe we're going to see price come down to you know, I would say I would start here anyway. That's sort of the area that I'd be looking for as a potential target. So we'll see how that one transpires. I want to wait for a little bit, and it's close right now. You know, if I drill into the market a little bit, you know, we're pretty close to that level now. So you could potentially get short, but I want to see it convincingly break down. It might even do it while we're in the middle of the session as well too. So we'll see how that goes. I'll come back to that one. If somebody wants to remind me here in about 20 minutes to come back and just double check this one again, we'll have a look at that. Okay, I'm not going to talk about the US CAD, only because there isn't really much to see here. Price has been consolidating like crazy since, you know, the end. I wouldn't even say here. It started basically right here. So since November. And remember what I was saying about quarterly reversals in price direction. So again, chop, 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 consolidated, drop down a little bit, took out the lows here, consolidate, 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 drop down just a little bit more. Like, it's just marginally dropping. And I was talking earlier, so again, I'm not going to go into this one and look for any trades, just because another one of my analysts covers whoops, didn't mean to do that, covers the US CAD, and there's nothing really there that I want to talk about anyway. There's really nothing to see in this until price convincingly breaks a level. And sorry, I'm trying to get rid of some of these lines and stuff on the chart here. Until price convincingly comes down and rejects either off of this level in here, which I've got highlighted on the chart, and once it starts trading higher, let's say for instance the US dollar decides to, do this, come down and then reject and go higher, well, I'm looking for higher prices on US CAD. It's pretty much that simple. The US CAD and the US dollar trade in tandem. If the US dollar is going down, the US CAD should be going down. Now, there's a caveat to that, and this is the only thing I want to talk about with the US CAD, is that we have not seen as much bearishness. How can I word that? We haven't seen as much strength in bearishness on the US CAD as we have the US dollar, which leads me to believe that the US CAD may not see the lows that the US dollar is seeing, which leads me to also believe that we could be seeing higher prices with the US CAD, and in turn higher prices with the US dollar index. So, that's sort of what I'm looking for. Again, I'm not calling anything out on this market. I think there is a ton of area right up in here. I mean, look at this. I mean, this is just, there's so many stops right here for everybody who was going short in this move here. It's crazy. And I think this is going to be just the prime suspect number one that price wants to hit and get into. And then right up to this 131.90 level here, it would be my target. But we got to wait and see. Price has been in a nice steady decline, and I think this is going to be a failure swing. So we could see lower prices on the CAD for sure. But what's going to change my mind on, and okay, so let me put it this way real quick. I'm moderately bullish on the US CAD, and I'm just waiting for the shoe to drop, basically, to start getting long. And what I think is going to happen is I think price will probably come down into here, somewhere in this area, fail to make a lower low, and then we're going to do this. That's my prediction for it. This ain't going to happen tomorrow. It's not going to happen next week. It's not going to happen next month. This will take a very, very long time to develop. But it's the same thing that I was talking about with this. These quarterly changes in price direction. We could be coming up on one here pretty quickly. And I think this is just waiting for that to happen, for the US dollar index to get in line. We may see one more drop, and then I think we're going to see our price run higher. So I'm not going to talk about that anymore. That's the US CAD. Aussie dollar, I'm not going to talk about either, because that is also another pair that one of my other analysts cover, and they'll be discussing that later this week. Crude oil. We have seen a nice reduction in crude oil here. We got not necessarily equal lows here, but prices come down, swept those lows, and we're going to wait and see what price wants to do now. We've come down to a significant area in here where we could potentially see a bit of a reversal happening. I'm bullish crude oil, so my bias going forward, very, very bullish, and let me just show you why. Doesn't take a genius to figure out why I'm bullish. And let me just go out to a weekly chart here, and you know what, I actually, 1 second here, I think I have a chart that isn't so scarred up. Let's have a look at this. Okay, this might be easier for everyone to see. So what I think we're going to see happen here, again, I'll just run through this very, very briefly here so everybody can get the idea as to why I'm thinking continued bullishness on the on crude oil. So market came in, they drove it down, they hit a low, an all-time low. I mean, they came in, my chart only goes back to this particular chart here, only goes back to, I don't even know what that is, 2007, the start of 2008. And we smashed through this low over here, okay? Came down. I mean, if anybody was long from over here, I mean, this would be a gigantic, like this would be like commercial hedgers or, airlines or whatever buying, crude oil at super discount prices here that would have their price hedged in here, that they would be coming down for. But obviously, there was significant draw on that to bring it down and to do what it did to clear these levels out. But we saw a lower low create in here. Okay, so moving forward, we've got a low here. We've got a low here. We've got a low here. We've got a low here, and price has just been steadily climbing, obviously, as you can see, ever since. Okay, I hate it when these trend lines don't go straight for me. I wish someone in MT4 would develop something that would I could just click a button and make it go straight. So just a quick tip. I don't know if anybody knows this or not. But once you get a straight line, for instance, okay, let's assume this is straight. If you hold down the Shift key and you can drag that over, you can drag that for anywhere you want. You just keep that Shift key down, and it won't deviate from that straight line that you've drawn, which is very, very handy. But you got to get the damn thing straight in order for that to happen in the first place, and that's half my problem. So if you see me screwing around with these lines sometimes, it's because I'm a little bit anal on. And it drives me crazy when I can't get, because you got to figure out exactly where price is going to, because some of the levels that we're looking at are, I mean, literally not so much on the weekly chart that I'm on here, but when you're on a 15-minute or an hourly, it really counts, and you got to make sure that your lines are straight. Otherwise, you could be calculating the wrong numbers. So anyway, I'm not going to do the rest of them, but you can see what I'm driving at here. So they only came back down for liquidity once, okay, and that was right in this area. I'm going to grab a straight line. That was right here. Okay, price came down, and you can see, I'll just drag that out. Price came down, and it and I mean just wicked below this old low right here. That was the only time they came in and came down for the liquidity under the market. And price has been skyrocketing ever since. So we have hit a little bit of a pause right here. This area in here, this red line delineates the high that we created last week. We've had a little bit of a pause. Prices come down, and we are now coming back down into the old down candle here from 2 weeks ago. And what I'm expecting to see is price come down to the open of that candle. It may not even get down to the open. It may just get down to the high. You'll like, God damn, these lines drive me crazy. There we go. So one of two things is going to happen. It's going to come down, or it's going to come down there, and we're already trading somewhat through the top of that wick. So anywhere in this area here, I believe we're going to see a rejection in price, and price ultimately going higher. So that's what I'd like to see if price breaks this level here. So if price comes down and breaks this, pretty much this candle here, if it goes lower than the body of this candle here, we're going to be looking at this low, and then we're going to come back down to this consolidation area in here, and we'll be looking at, what am I doing here? And we'll be looking at areas in here to potentially get longs. Now, price hasn't really returned back down, and there's another consolidation here, level here. You know what, I'm going to call it consolidating in here. This is a bit better, but it could potentially come back down to this high as well, too. Price tried to do it on this run up. It tried to come back down, touch off this consolidation level, and then run higher. So this is basically, breakout traders and everything else. You get breakout traders that sit there and sit in these consolidating areas, and they watch for price to break out of them, come back down, retest those old areas, the old highs of the consolidating levels, and then get long from there. It's a great strategy. I employ that sometimes as well too. I definitely like trading with confirmations in mind, but that could be what happens if price breaks this low here. That's my next target, is this old consolidating level here, and then this will be the next one here that I'll be looking at. I don't think price is going to retrace that much though, and again, just kind of going out to the weekly and the monthly, we've still got so much room up here for price to draw up to. And my first target is obviously the 69.60 basically the $70 per barrel level. That's my first target. So I don't think we're going to see a major retracement before we hit that level there. Going back to the daily. So I think anywhere in this area here, I'd be looking at picking up some longs and getting in on the next bull move going higher. It might help if I drew that object as a background. There we go. So basically anywhere in this area here is sort of where I'd be looking at picking up some longs. And if price came down and broke 63.60 there, I would hold off on getting long and wait until price traded down these areas to see what would happen. So with that in mind, let's just kind of look here real quickly. I'm just going to get rid of some of this area in here. Here's a nice level down here that price could come down to. The 63.88, you know what, 63.90, even big figure 64. That would probably be an area to look at, and then price bouncing from there. If it wants to go lower than its current level, I've got a sneaking suspicion that it may not get this low. I kind of think there's a big consolidating area right in here, and I kind of think it's going to get stopped in this level here, just for whatever reason. Don't know why. I just sort of like it a little bit better. Could be a personal reason. I don't know, but I'd be looking for somewhere in this neighborhood to look at getting long on crude oil. I think we've still got some higher prices to see for my reasons that I discussed, and we'll have to wait and see. So there's no trade on this one right now that I'm looking at. I want to see price develop further. We could see this thing collapse a little bit more. Like I say, we just took out these lows here, and but they've done a pretty good job at consolidating price in these levels here. And there's a bit of a consolidating area. Let me just zoom out a little bit here. Bit of a consolidation area in here, so to speak. So I'll just grab this guy here, and there's a bit of a consolidating area in here. To be honest with you, it's more like right up here. All right, and so we're starting to trade that in there right now. So I'd be looking internally and saying, well, you know, if we're about halfway into this thing, you know, like I say, this level right in here, that $64 big figure right there looks like a good target to me. So we'll have to watch and see what happens on crude oil. Sorry if there's any crude oil traders out there. I'm sorry I can't give you a better answer on this. Usually crude is very predictable. You can see easy levels, and you know, sometimes it's just, you don't know how far the market's going to fall. I would, if you're a scalper, you could even get short. I mean, that's let's say, for instance, price did hit the 64 level, 64.75, you could potentially take a short, but I am the last guy to take a short in a bullish market. I just, once in a while, you can see it and you can predict it, and it's no problem to do it. And you can scalp yourself out, you know, 30, 40, 50 pips, no problem. But when I'm in a bull market like this, and I see price doing this, it's very nerve-wracking to be in a short position on this. Like, I'm not trying to pick the top. By no means am I saying that this is the top. It's 66.20, sorry, 66.62, and we're going to see price come down lower to here. By no means do I think this is the top. I think it's going higher from here, and unless, like I was saying to you, unless price breaks this level in here, I'm not going to be bearish anytime soon. So I'm going to assume continued action to the upside, price action to the upside, and I would suggest, I'd like to see it bounce right from here and then get long. I mean, that would be perfect, right at the back at the top of this consolidating level in here. Get long again, and away it goes. But we'll have to wait and see on that one. So sorry, I can't be more help on the crude oil, but we'll just have to play that one by ear. And that's, let's see here, crude oil, S&P will be discussed on Friday in our live session at 7:30 a.m. New York time, so make sure you set your calendar to that one. And same link and everything like that. We'll be all set up live to go, same link that you used to get into this one, so we'll tweet you, send out the notification before that happens, so you got lots of time to prepare. And USD Japanese yen. This was an interesting pair. I actually did a video on this. I don't know if any of you guys caught it. I did a video on trading and consolidations, and we actually put out a signal on US yen, and I believe we had a long entry from today, and it was actually, we were getting in on this move right here. So this is prime example actually. So okay, so you can see here we got long at 108.75, and I can actually show you here the exact signal that we use, but we got long at 108.75. So this is Tuesday's trading. This is Monday's trading in here. So we got long right in this area here at 108.75. Price then ran up. The high on this candle was 109.9. Call it 109.20. So basically there is 45 pips of potential profit there. So what we did, you see this right here, target 1 right over here at 109.10. Like I was saying to you, when we trade, we set our stop loss, which was right down here. We set our entry, and then we set our first target, and then we set our second target. Okay, so this was our second target that we were looking for. Price has since come back and reversed, but it doesn't matter because we took profits at 109. We took partial profits at 109.10, and we moved our stop from 108.40 up to break even. As you can see here, and it actually, price gave us 2 opportunities to get out at these levels here before it came down and stopped us out. But even though we took a stop on this one at break even, we didn't lose anything, and we paid ourselves on the trade, which means our net bank account is net positive because of that simple trading philosophy. Always pay yourself as soon as the trade goes to 30 pips in profit, and move your stop to break even, because you never know what's going to happen in price. And again, it's non-farm payroll week, so anything could happen. But back to the idea here. Give me 1 second. I'm just going to clean up some of this so you can see it a little bit better. But I did a video, an educational video, on the dollar yen, and apologize guys, I just got to grab these levels here, but there we go. It's going to drive me crazy. Yeah, it could be on any chart. I got so many trend lines and everything. Let me do this, guys. Bear with me for 1 second here. I want to make sure that this is nice and clear for you guys to see here. I just gotta find the thing. There it is. Okay, that's better. So I did a quick video on the USD, Japanese yen, trading and consolidating areas, and what I was basically, to kind of summarize it, it's about a 12-minute video. Very helpful if you trade in consolidating areas, or if you know how to trade in them, or if you're wondering how to trade in them. It's a very helpful video for good. Basically it's a good tool to have in your trading toolbox. So, Jesus, sorry guys, stupid thing. I'm not gonna worry about that. It should be 50. Okay, there we go. So this is a trading consolidation range on the daily. Okay, you can see this here. Now, what you want to do is, every time price comes up to these areas, you want to either sell it or you want to buy it if it's coming down here. So what we're looking at is price coming down here, rejecting, and going higher. Now again, this all comes back to what the US dollar is doing. So I mentioned earlier, the US dollar, we're looking potentially at it reversing. It could come down a little bit further before it does, but we're potentially looking at it reversing. So that would coincide with the Japanese yen, and what I say with the US CAD. Same idea is we saw weakness in the US CAD, relative strength in the US CAD compared to the US dollar index. And I think we're seeing the same thing here in the US yen. We're failing to take out that previous low back down here so far. So what I want to see here is a rejection at these levels, and it could be anywhere. Let me just change this up here so you can tell the difference between the two. Okay, so I would sort of like to see this area in here, rejection, kind of see how it's wicked down in here, and the price wasn't too sure, it went back here. I'm going to zoom in a little bit. Price ran back up here, and now we're trading just below this candle here. I'd kind of like to see price reject off of either one of these two levels, 107, 108 big figure or 108.50. I'd like to see price reject and go higher from there if that's going to fall in line with the theory that we've got for the US dollar index. But we won't know until probably the end of the week. And unfortunately, we had a nice move on this today. We could see continued weakness in it a little bit lower. It may even want to go down and hit these stops and take out the levels down here. But in trading and consolidations, what you want to do is you want to obviously buy the lows and sell the highs. And really, this is a great pip range too. If you can get in on these consolidations, you can make an absolute haul on these. I mean, it's a 650 pip swing each way. So you could have got long. You couldn't do it here because this was the bottom of the consolidation, but you could have done it here. You could have done it, here, and could potentially do it here on the long side, and then on the short side, even more opportunity. Again, this is the start of the consolidation, so you can't do it there, but you could do it here as a failure swing from this old high. Could have done it here. You could have done it, and you could potentially have done it there. I'm not going to go into that right there. And you could also have done it up in here. So this trading opportunity, and again, this is a year. This is a full 1 year calendar. You could have went short 1, 2, 3, 4 times and long 1, 2, 3 times. So you could have got 7 potential trades out of this trading range, each of them for roughly, you call it 500 pips. 500 times 7, that's 3,500 pips. I mean, that's a monster accumulation value in your trading portfolio. So that's what I discussed today. So very, very cool stuff. If you want to check out that video, you can find it on our YouTube channel. It's all free, trading and consolidating range. So that's sort of what I discussed a little bit this week. But anyway, Japanese yen, basically, long story short, I want to see price either do one or two things: break these levels here, reject, or just go straight higher from here and start to take out. Again, we'd be looking for longs in this pair unless price convincingly, and I mean close down below, lower than this low here. I'm not bearish on this pair yet. I'd be more inclined to be bullish just because. And if you put an RSI indicator, overbought, oversold indicator on this chart, you'd see prices now creeping down to the oversold level on this as well too. So indicator-based trading, which I don't do, but that would be one indicator that you could use to identify that trend as well too. But you don't want to just go in there and just start buying into things just because it comes down there. You got to wait, you got to watch price, see what it does. So for instance, in this case, I would be looking for price, see how it's come down in here. If it's going to go long, I would be looking for price to basically do this, to come down, create a low, come back down, trade up off of that low, have a nice rejection level, come back down one more time, fail to create another low, and then that's when I'm getting long, and then we're going to go higher. So that's what I'm looking at on the US yen. So just want to discuss that quickly. Not going to do any trades on that for the remainder, but if you are a US yen trader, that's the outlook that I'm looking at on this. And again, it's all coinciding with what is the dollar index doing. Are we going to see this happen, a push higher and then a push lower? If we are, well, then we're going to see lower prices in the US yen. It's going to be that simple, right? We're going to see price potentially come down into here, right? And then who knows, it'll reject. But like I say again, and sorry to beat this one to death, I don't know if you guys are US yen traders. If you are, just put a 1 on your chart or a yes. Let me know if you guys like trading the US yen. I can talk about it a little bit more, but I'm just going to wrap up with it by saying this, that if we are looking at the dollar index and a potential reversal either in here or in here, let's say for argument's sake that price does what it says it's going to do, okay? It's going to come up here Tuesday, today's trading, tomorrow's trading, Thursday's trading, and then Friday they're going to use non-farm payroll and jam it down. It's going to continue lower. I'm going to be looking at these lows here, or sorry, these old highs here, as I said before, all right? And then we're going to wait and watch and see what price does from there. It won't take very long to get there. It could be next week that could happen. And again, that whole quarterly shift coming in, where I believe we're going to see a shift in price in the next, week to 2 weeks, I believe that could happen. So let's say we get that happening. Let's say price comes down here, that shift happens, and we start going higher. That would coincide with the US yen. So we could get a drop down. Price could potentially maybe take out this low right here. Let's say for argument's sake it stops at 106.90, just because I got the level on the chart. And all of a sudden the US dollar index starts to make that push higher after rejecting off of that weekly consolidating area and go higher. We could even see a failure swing. That would be beautiful. We saw that. There is no better key indicator out there. I mean, if you want a big red flashing light on your screen that says buy me now, buy me now, buy me now, it's that. If the US dollar index takes out these lows here and bounces off of this level and starts going higher, and the US yen fails to take out this low and trades starts to trade higher, and that's it. Wait for the retest. Wait for price to basically, let's say this was the failure swing, for instance, at 108.40. You wait for price to do this, to come back up, come right back down to this level here, and that's when you buy it. You get all over it, and you get long, and you wait and you sit on that 500 pip, 600 pip movement for price to come back all the way back up in this level here. So anyway, that's the US yen. I'm not going to talk about that one anymore. And Bitcoin here. Let's just discuss this one real quick. I'm getting a little bit long here. I'd like to typically wrap my sessions up by 1:30. So I'm just going to quickly talk about Bitcoin here, because there are some people that like Bitcoin, and I don't mind trading it myself. I just want to take a look at the euro. See, the euro is starting to decline here, so we may not get that movement back up, unfortunately. It may just steadily drift lower. The pound dollar, how are we looking here? Same sort of idea. I told you one of two things is going to happen. They're going to jam it higher, take out these stops here, create the high in the day, and then run it lower, or they're just going to start running lower. That's typically the two things that happens. And what you want to look at, you don't want to go and sell it right here. You want to look for price to come back and retest off of these levels right here. You see this, I don't necessarily think we're going to this blue line again, but probably right about here, somewhere in this neighborhood at 140, 40, somewhere in there. Price comes down, trades back up, rejects that level, 140.40. I would get short there, and then again, you could be looking at lows at 139.50. So you'd have about a 90 to 100 pip profit there. So that's what I'd be looking at. Or you can get short right now if you want to. I'll leave it up to you guys. I'm not going to put the trade in on this one per se right now, because I'd like to see that actually happen and go a bit higher. And I'm not in a rush to take it. So anyway, that is the euro, USD, pound dollar, and here we are on Bitcoin. So let's go to a daily. So I don't know if any of you have seen Bitcoin or any of my analysis for the past little while. But I've basically been saying it's been going lower ever since it made, I thought personally it was going to hit 20,000. I was looking for it, and then once I saw this candle happen, I started calling it right away, and I didn't think it was going to decline this much. I mean, this is unbelievable, this level here, but I've been calling it short ever since. This failure up here, I've been calling it short, and when price failed at this level right here, basically right there, I knew once it took this low out, once it created this low, I knew they weren't going to leave it and they were going to come back down for more, and it was confirmed by this candle failing right here, and it's been short ever since. Now you see these levels that I've got marked down here. I'll just put a highlight on here so you can see it a little bit better. Couple potential levels down here that I'm looking at. I'm still bearish on Bitcoin. Right, I think this is going to happen here basically, and price we're going to see lower. I definitely think we're going to see sub 9,000 and into the low 8,000s. I'd be interested to see on what price does from there though. We could get a bit of a pop from these levels, or it's just going to keep driving down, and we could be sub 5,000 levels here before we know it. But price, look, if you're sitting there holding Bitcoin long right now, I would suggest that you maybe hedge your position and put a couple of short positions on there right now, because price for Bitcoin is going lower. And so there's no other way. It may see what it's doing here right now. It's building in, it's building up orders right now. Bitcoin doesn't trade sideways. I mean, like, yeah, there was some sideways trading in here for the most part, but price has been very, very explosive on this ever since. Okay, and this is just ridiculous. This is all hype. That's all market hype right there. When you start hearing the guy begging your groceries at the grocery store talking about Bitcoin, be worried, because you're looking for a correction. And you can see here, all this is people is hype. People buying this before Christmas. Bitcoin this, Bitcoin that. It's going up. It's never going to stop. We're going to hit 50,000. We're going to hit 100,000. This is all mass hysteria and hype. Just pumping this up. And look at these massive ranges in here. I mean, like this day rate here, for instance, this one up day rate here. I mean, like 14,000. Like that's a 3,000 pip. $3,000 swing. I mean, it's unbelievable, right? I mean, that's a motive wave up. I mean, that's mass hysteria, and that's people just plugging, the money that they have stuffed in their mattress into this thing towards the end of the year, because somebody told them, their bag boy who's bagging their groceries is telling them it's going to 50,000. You better get in before it gets there. It ain't happening. Anyway, and you can see what price has been doing since. So long story short on this, we're going lower. This is my first target in here. I want to see what price does in this level. I'm calling it now. It's going to be sub 9,000. 8,300 is about the level I'm looking at. And I want to see what price does in this level here. I would be interested in looking at potentially taking some longs in there. But again, I'm not just going to I'm not going to put a limit order in here and just leave it and set it and forget it and walk away, because price could come in here, think about it for literally a fraction of a second, and then slam down into here. I don't know that, so we got to sit and watch that a little bit. But I do think we are definitely going lower. Excuse me one sec, guys. I'm just going to get a drink of water. So, yeah, if you guys are, if you know anybody long on Bitcoin, I would suggest getting them to hedge their position on it for the interim here, because, like I say, we're going to come down lower. And so, actually, what I think is going to happen, they've been building up some nice positions in here, nice consolidating level in here. I'd love it. I was calling it earlier. It hasn't happened yet. See the shaded area up in here? I would love it if they did this, because we could get in some serious shorts. That didn't work out very well. Stupid thing. Hang on 1 second. Sorry, guys. Just trying to grab that level. There we go. And drag it over. That's what I was looking for. Okay. So you see I have these two levels here between 12,550 and 12,750. I think that's a good target. So what I think potentially may happen is, and if you've sat through any of my other live video analysis before, you would have heard this before. I want to see price do this. This would be just beautiful if it happened. Just basically like a head fake, right? Everyone's sitting here hoping this thing's like a bull flag or something like that, and price is getting squeezed, right? Price is just getting squeezed. So it's gonna, like I was saying, it's gonna be like a spring. They're compressing that spring, compressing it. Eventually, it's going to bust out. What I would love to see happen is to do this head fake. Jams up, grabs all the liquidity in here, and then starts to roll over, and they start selling it and dumping it. And again, then I think we're going to hit these levels down in here very, very easily. So price is compressing very nicely right now. You can see this wedge formation right in here. One of two things is going to happen. They're going to take it up higher and then roll it over, or it's just going to start dumping from here. So that's my call on Bitcoin. So I'm not, I'd be interested in taking shorts for sure, but I'm not going to go short at the current level. Like I'm just, there's no way. There's a lot of sentiment. Like, look, they haven't once come back, right? They had a high here, which was the top of the consolidating area, and they failed to take it out here, failed to take it out here, failed to take it here, failed. This one time they came back and got 2 days of liquidity right there. That was on Monday, and that was just a gap up, and now they filled that gap, and now they're coming on it again. And same thing on the bottom. They haven't taken it, haven't taken it, haven't taken it. So I would love it if they just jam this thing up here, a couple thousand pips, and then sunk it from there. I'd be looking at getting short right in there. So if you are looking at trading Bitcoin, I would suggest you, if you're bullish, which I don't know how you could be after something like this, I would suggest you switching your standpoint and looking short-term bearish. Now, I don't think we're going to be bearish forever. And don't get me wrong, I'm not here to crap all over Bitcoin. I like Bitcoin. I think it's the wave of the future. Cryptocurrencies, how could it not be? I mean, paper money is the thing of the past. I mean, it's just we're going into a digital age. I mean, and I was just actually saying this to my wife the other day, like, I can't remember the last time I had cash, physical cash, paper bills, or I guess plastic bills now, in my pocket, right? Like, I can't remember the last time. It's few and far between. And so digital currency, I mean, everything now is done on credit cards via credits anyway, so it's just the wave of the future. I think Bitcoin, and blockchain currencies and the whole bit, I think that's the wave of the future, and I think ultimately this probably will hit 100,000. And who knows? It could hit 200,000 for all I know. I'm overall long term. I'm very bullish on this. I think this is just a short term correction, but I do think it is a deep correction, and I think everybody look. You see here, like this is educated traders. This is educated industry players. This is people who know what price is going to do, getting in the beginning stages of a nice motive wave up, okay? And then now you're starting to get into, the hedge funds and the big market guys moving this thing up into here. And you see right here, this correction right here, I would suggest that would be some banks getting in on this level. And I can promise you it is. And I got a little story to tell about this correction rate in here. I'll tell it here in a second, but you can believe me or not, but it's all facts. You can find the news articles. But then you see the hype building right here, and you can see, and this is about when that analogy I used about your bag boy who's bagging your groceries, telling you about Bitcoin. This is right here when he was telling people about all the opportunities and the instant millionaires that can be made out of Bitcoin, and you can see everybody taking that bag boy's advice and hyping this thing up and pushing it and pumping it, and then the market makers came in and just crushed it. They're selling. But what my thoughts are in this little area in here, and to be honest with you, I think it goes back a little bit further into this area in here. But you saw in the summer, so it was actually before this big move up here, this big jump up into here. In the summer, I can't remember the exact month. I think it was August. The CEO, I think it was the CEO of JP Morgan came in and said, we don't think Bitcoin is a real thing. We think it's a bubble. We think it's just, it's garbage. We're not investing in it, so we're not doing anything with it. Nothing's happening, et cetera, et cetera, et cetera. And all the time, all they were doing is waiting for the market to come down, correct, because then in September, I think it was mid or the end of September, they came out and I don't know, they released their holdings, and it was found that JP Morgan was one of the single biggest institutions buying Bitcoin on this dip right here. So that kind of led me to believe that no longer is it just, guys out there who are small-time traders that are looking at this thing, or investors, angel investors, things like that, putting their money into Bitcoin. This is now the markets, the big guys, the big banks, the big industry movers that are in this thing, and they're the ones that are starting to manipulate price on this one. And I'm not going to go into too much detail on that, but you can find that out yourself. Like, that's all common knowledge. It's all, news articles. I mean, just Google that. You can find out, they're publicly traded companies. You can find out what the net holdings of their banks and financial institutions are. And the one trend you will see is that cryptocurrencies are starting to be a big position on their holdings. So check that out for yourself. You can do your own independent research in that. I'm not going to go into it any further, but Bitcoin in a nutshell, that's what you got. Lower prices for the short term. I think overall at the end of the year, I think we're going to be above 20,000, right? I mean, who knows? This thing could go to 50,000 this year. It wouldn't surprise me at all. All I'm telling you is I'm not buying Bitcoin at its current level, and I'm going to wait and see what it does at this level here. And I'm definitely going to probably be getting in longs if the price wants to come all the way down to here. So that's basically it in a nutshell. So I am going to, and I've been talking about this since last week. If you follow me on any of my live sessions, you'll have heard me say that, and I'm wrapping it up here just in case you were wondering how long I'm going to drag this out for, but I said last week I was going to sit down and do a commodity video, an in-depth commodity analysis video on all of the major commodities, the grains, the softs, the metals, yada yada yada. And I want to basically do an in-depth video that does some analysis on it because it's the start of the year and you get some really good movers at the start of the year here. And I typically like to let price do its thing for a couple of weeks in January before getting into it. And unfortunately, I've been swamped the past week. But because it's non-farm payroll the end of this week, I'm not doing any trading after Wednesday. So it's going to allow me a chance to finally sit down and do that video. So I will be putting that out, and I'm going to do some in-depth analysis. I'm not going to go in-depth in terms of showing you guys necessarily how I'm arriving at my conclusions, but I will definitely be showing you some very interesting levels that I like, some potential moves that I think are going to be coming up in the next couple of months. And if you guys trade commodities, you know how powerful and how big these movements can be and how much you can make off of these things. So that's what I'm going to be doing, and I'm going to be doing it on all the major commodities. And what I basically want to do is just have a final list of, for instance, you've got wheat and corn and rice and all the grains. Essentially, I'm going to go through all of the grains and I'm going to pick out the leaders of each one of the categories and come up with some nice price levels on those leaders. And we're going to watch for price, and then we're going to be starting to take some trades on those coming up here into the next 2 to 3 weeks. So you can look forward to that. I'm finally going to get a chance to sit down and do that later on this week, and I will update you when that's coming. And apart from that, I think we've pretty much covered everything that I wanted to cover for the most part. Oil, I'm hoping oil is going to start making a bounce higher here. Getting back up into these levels here and potentially seeing. I'm very bullish oil, just in case you guys didn't already know this from the earlier in the presentation here or live session here. But I think we're just going to see a very short dip, and then I think we're going to start skyrocketing again. And overall, oil is going to be in my long-term analysis for commodities as well too in the energy sector. But this 69.60 level here is going to be my first target, and then my next target is basically back up into this consolidation area up in here at $73. So that's what I'm looking at moving forward anyway in oil. But that pretty much about covers it, guys. I don't want to take up too much more of your time. I haven't looked at copper today. I was actually calling lower prices on copper, and then we had this one big candle here that kind of threw me out for a loop here, and then I saw the candle reject here, and now we're going short. Just so you guys know, I don't know if there's any copper traders out here. Price is going to go back down to this 306 mark, and ultimately I'm calling $3 even on copper, assuming that it's close enough. Assuming that this isn't the high and it's now forming a bull market and going to take out these lows here. If we are going to see continued bullishness on copper, You can see here, right, just simple. I believe these levels we're going to see a bounce on. So I'm going to be watching for it on those. But anyway, that's about it, guys. I appreciate your time. By the way, I got the question box up here. I mean, if you guys have any questions, now's the time. I'm going to end the session here in about 2 minutes. So if you want to know anything, if you have any questions about anything, you know, by all means, please let me know now. If not, like I was saying earlier, we are doing another live trading session tomorrow. One of my analysts is taking the London Open session again, and we will be trading that from 12 a.m. New York time onward for about an hour or so tomorrow, and then I'll be back again on Thursday to do the same live trading. And like I say again, you know, Thursday there really won't be much going on. I'm pretty much certain that we're going to see a consolidating market, a sideways trading market for all the major U.S. backed pairs going forward into Thursday, into non-farm payrolls on Friday. So there won't be a lot going on Thursday, but I'll jump on for half an hour, call out a couple levels. We'll see the week was traded, and then we'll talk into next week and start setting up next week. And then Friday, like I was saying, 7:30 a.m. New York time is my other analyst coming in, and he'll be trading the S&P and doing some market analysis on that. So you can look forward to that. And I guess if nobody has any questions, I'm going to end it here. I appreciate your time, everybody, for coming in. Please check us out. Again, you can sign up to our website for free for 30 days. You can check out all of our trade signals. We have a live chat room that you can come into, a trader chat room where we, myself and my other analysts are in there talking with all of our clients all day long about trades and you know, stuff we're doing, because we're always in front of the markets. And we have a signals channel that we put out with all of our live signals, so you get instant signals, up to date, up to the second, right to your phone. So even if you're not in front of the charts, we'll send out a signal. We'll say, boom, you know, like for instance, today we had a crude trade, and we had a US yen trade, and we had a cable trade put on. Sorry, that was for Monday. And you know, those instantly went out to all of our subscribers' phones. And so there's you know, a lot of good stuff happening there. So check us out on f45trading.com. You follow us on Instagram at Future45 Trade Signals. We're on there. We do tons of content on there all the time, throwing charts up and studies and everything else. So tons of value. So at the very least, guys, follow us on Instagram if you can, and we're on Twitter as well too, under the same Future45 Trade Signals. So with that, I'm going to end this. Thank you very much for your time, and look forward to seeing you the rest of the week. Have a great evening.